Good morning, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on Thursday, September 20th, talking about the energy markets. So let's get right into crude oil here. Remember, looking at the November crude oil contract here now, off a little bit this morning, down about 32 cents, around 91.98. The Brent up a little bit at 108.57. That's up about 38 cents. Taking a look at nat gas, a bit firmer here, up about 2%. We're up about 5 to 6 cents right now, trading around 281.80. Taking a look at the complex, firmer also. RBOB 287.31. That's up about 4.5 cents. And the heat around 306.27. That's up almost 2 cents. So what do we have going on here? Well, let's first start off here. Let's talk about yesterday's action. What a day! Pretty big sell-off there. Many of you know, I still I like the short side of the market. I was talking about that in yesterday's post, and I still like the short side right now. But let's talk about what drove prices lower here yesterday. Well, one, we had those DOE numbers come out, and the initial trade was looking for a range of in a build of around 750,000 to about 1 million barrels. Came in at 8.5 million barrel build. So that's pretty substantial, and way outside of what the general consensus was. And so that obviously helped put a lot of pressure in the market as we see the supply side rise. And as I've been talking about in a lot of the posts, the demand side continues to remain very questionable at best, and that's being further illustrated here today, where you're looking at some of these reports that are coming out, what some of these analysts are saying, and they're looking at basically a global slowdown. So that's kind of what I think has been fueling this big sell-off that we've seen. Plus, as I mentioned yesterday in a couple of the other posts, the addition of the rumor coming out of the administration that there could be a release of oil from the SPR. And I think that rumor was started by the administration. That's my personal opinion, considering the elections are right around the corner. And of course, they stand to benefit from seeing oil prices driven lower, which in turn could help lower gas prices. That's my own opinion. But nonetheless, we have seen a major turnaround in the price of oil. Now, as we near, down around $90 a barrel, I think you might start to find a little bit of support. But ultimately, I think you could see prices dip into the upper 80 range. The technicals, obviously, were very overbought. Those have started to come down off of those levels. But again, I mean, my opinion is that there's still further downside action in this market. You might see a temporary bounce out of here as you see some shorts covering a little bit. But ultimately, I still think that the prices have the potential to move lower. So you want to talk about some different strategies in the market? Feel free, give me a call. I'd be more than happy to go over some, calculated risk strategies with you. And for those that are a little bit more aggressive, we could talk about some, unlimited risk type strategies as well. But nonetheless, really, traders in this market environment, you got to be focusing on risk management. I mean, I think that's crucial, to taking advantage of the price moves here, seeing the volatility. For example, real quick, look at yesterday's price action, $5 range yesterday. We closed down, over $3, but the overall intraday range, it was $5 move. So a lot of opportunity there. Certainly there's risk there also, so you got to be smart about it. Give me a call at the trade desk. The number's on the screen there. Shoot me an email. We can get into more detail. Of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck, good trading.